I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of IncResearch.ca, Canada's first online financial news and research service. Welcome back, Ted.
It's great to be back.
People are watching the U.S. Fed wondering, will they or will they not hike rates? People are putting the odds now, I think, on rate hikes, not just one this year, but several.
Well, the odds on balance are still skeptical that they're going to do it, but they've increased substantially from basically not a chance to, they might really pull the trigger this time. And I think what's driving their desire to raise rates more than anything, and they don't talk about it a lot, but if you listen to the speeches and you pay attention to what they're saying in their remarks, they seem to be concerned about a real estate bubble forming, both commercial and now residential in the U.S. And don't forget, they were burned very badly before the last recession, leading up to the last recession with real estate. And I think this Fed doesn't want to be, the second time around gang that, will be accused of not seeing this coming. So I think despite all the bravado you hear about the U.S. economy doing great and how jobs are doing great and inflation is, pickup is just around the corner, and we saw PCE today come out, that's a personal consumption expenditure index. It was nowhere near the Fed's target. It's still well below 2%. So there's something else really going on here because the Fed is well away from meeting its dual mandate of consumer price inflation and job growth. I think there's something else going on, and that's real estate. And we've heard the Kansas City Fed president talk about fears of a commercial real estate bubble, and now we're starting to see signs of froth in some condo markets in the U.S., and I think this is what's really got the Fed frightened.
Well, in Hong Kong, real estate sales are down 25%, prices down 13% since last September, and I've heard the Miami condo market has now reached a point where you can't sell one. That's
right, and what the Fed doesn't want to have happen or see happen is this Miami experience, replicate itself across the country, because then what have you got? You've got a full-blown bust on your hands. And so they want to make sure that we don't get to the state where you have overbuilding in condos in other centers. And, that's in stark contrast to the hands-off approach of the Bank of Canada and also the Reserve Bank of Australia, where they basically rolled the dice and are going to let the real estate market spin as far as basically their pain threshold can take it. And I don't know what that is, because we've seen no hint from the Bank of Canada that they're the least bit concerned about hyperinflation in Vancouver real estate markets. They mention little things like, your household vulnerabilities are on the rise. Well, give me a break. I mean, that's a pretty lame description of what's going on in real estate markets in two out of Canada's three major cities. And, you mentioned Hong Kong. That's a different situation because they are pegged to the U.S. monetary policies because of their fixed exchange rate to the U.S. dollar. So as the Fed begins to talk about tightening, it's a case of, Hong Kong, catching the Fed's sneeze and it turning into a flu. The combination of the Fed tightening monetary policy, monetary conditions in the U.S., And of course, the slowdown in China has really hit Hong Kong hard. So it's a unique circumstance in that it's got two factors that are working against it, both the China slowdown and the tightening posture of the Fed. However, we're starting to see signs in China that money supply growth is soaring again, credit creation is soaring again. So it could provide a boost to Hong Kong. We'll have to see, but it certainly seems to be providing a boost to Vancouver, and we have evidence that it's coming back in rip-roaring fashion in Sydney, Australia.
Is the Vancouver hyperinflation in real estate going to continue for as long as we can see right now? Is there a point where enough is enough?
Well, Mr. Market or
this particular market,
whatever you prefer, we'll decide that. And I don't know when that's going to be. At some point, it will just become too outrageously priced for even the most speculative real estate global player to buy, and at that point the market will fall. But I don't know when that is. And let's be clear here. The Vancouver market is no longer being driven by supply shortages. It's being driven by a hyper buying, hyperinflation environment that, yes, it's based off of some supply and demand fundamentals that have been in the past putting pressure on prices, and I underscore both supply and demand. It's not just a supply issue. There's also a demand side to it. But now I think it's pretty clear that this is a demand-driven market, and what's driving the demand? Low rates from the Bank of Canada, money printing and pumping out of China, along with other central banks playing a supporting role. So we've got an open real estate market in Vancouver, Toronto, other cities in Canada. They have not quite as an open market in Australia, but they still have mechanisms for China money to flow into that market in the new home construction area, and that's where we've seen an uptick in froth, according to media reports. There's a report out of from Bloomberg that indicated there was at least one Australian development that sold out in very quickly. I think it was in a matter of hours, and in the first 27 days in May, Sydney home prices are up 3.4%, and that comes on the back of a Reserve Bank of Australia interest rate cut at the beginning of May. So as the Aussie dollar tumbled in May, it just made new homes even more attractive to offshore buyers, and so not surprisingly, we've got an uptick in foreign demand in Australia, and it's turning into more of an uptick. It looks like a hyper housing inflation is come roaring back in Australia. So I expect we're going to see similar dynamics here in Vancouver and Toronto and probably some other cities. We could get another major round here of price inflation in the Vancouver and Toronto markets, and we'll have to see. But the early indications are that this is not over yet by a long shot.
I mean, here in Vancouver or the greater Vancouver area, we're seeing people line up in the rain for days to buy townhouses in outlying suburbs as if these won't exist anymore. Are they panicking, or is this a market that's going to dry up?
Well, it will dry up at some point in terms of people willing to pay, top-notch global dollars for a square foot in the Lower Mainland. When that is, it's impossible to predict. But, you got to think we're closer to the end of this game than we are at the beginning. It doesn't mean the final innings won't have a lot of points on the board. Like, it could become very exciting, Jim, as we head towards the ninth inning here. And we're already seeing some of the froth clearly on display, and has been reported in the local media, particularly by the Globe and Mail. So we've definitely got people worried that they're going to have to buy now or forever be priced out, but that's a typical hyperinflation environment. And in this environment, the number of winners falls by the day and the number of losers grows. And what do I mean by that is that as you get a gap between your average price and the more expensive, larger homes, it becomes harder, if not impossible, for people to trade up. So even if you buy now and your condo or your townhouse goes up by 10%, let's say you're a family and you've got a kid on the way and you decide to get a townhouse, you lever up and, you beg, borrow, and steal whatever you need to do to get that down payment and to afford and pay top dollar for this townhouse. If it only goes up 10% over the next, say, 2 years, and then you have another child and you want to buy a single family home, if those single family homes go up 30 or 50%, which is well within the realm of possibility given the current environment, you've lost because you can't trade up, even though you've put everything you had into buying this starter home. And that it was the formula that worked for generations in the past, but it won't work under the current environment. And, I hope our policymakers understand that. Our politicians in all levels of government, they don't seem to have caught on to it. I assume they will fairly soon, because as the number of losers starts to grow, the political calls to do something about this will become louder. And unfortunately, at that point, the solutions become that much tougher. So you really got policymakers kind of boxing themselves into a corner. This is not going to turn out well when people realize that they can't win at this game. And the only people that are winning are those who are exiting. So that will mean people who are downsizing. And if you're sort of in a position in the Vancouver market now where you're thinking of downsizing, now is a great time to do that and exit the market. If you're in your 50s and you've got a typical paying job here in Vancouver, or maybe even a below average paying job, and your house now is worth millions of dollars, I think some people are going to be looking at that going, well, look, what are the chances of me making in salary what I could make in this home? You sell your home in Vancouver and then are prepared and don't have the family ties to exit and move to another jurisdiction with cheaper homes. And it doesn't even have to be in Canada. You can, with what you've got in a lot of these homes in Vancouver, you could conceivably sell out, buy a home in Central America, and you live off of the cash. This is becoming a market for the winners who have to exit. And the other type of winner will be, if they're skillful enough at playing the game, are speculators, because they'll go in and out of the market quite frequently and pile up commissions and short-term capital gains. So these are the type of players that, of course, will cheer this market on till the very end, because they believe that they can get in and out quicker than the average person and the average investor. So I'd be very careful about the hype you hear about how great the fundamentals are in the Vancouver real estate market. The fundamentals are getting stronger for those who can exit, and they're getting weaker for those who cannot.
With the U.S. Canadian dollar difference, if you're looking at real estate on the west coast of Canada or Toronto and you're in China, well, there's a 25% discount if you go Canadian.
Well, that's right, and this is the big problem that the Bank of Canada is serving to us. Not only do we have low mortgage rates, which, people say, well, that's great, it makes a house more affordable. Well, it also makes a house more expensive because people are bidding higher on it because of that very equation. But it also makes it cheaper for foreign buyers, and I believe there was a study out of Simon Fraser University that showed a correlation between the Canadian dollar and Vancouver housing prices. So, there's been a lot of talk about, well, mortgage rates and Vancouver housing prices don't correlate. Well, that may or may not be the case, but let's assume it is. Let's take a look at the Canadian dollar, which is also a function of monetary policy. And as the Canadian dollar goes down, Vancouver real estate prices go up. There is a link between that and what the Bank of Canada is doing. So we've got a very, I'd almost say violent market dynamic going on right now, and we could see a massive surge in prices. And ironically, if the Fed raises rates, it could make things even worse. And the reason, in terms of the intensity of hyperinflation in Vancouver, because what could happen, I'm not saying it will, but there's a strong possibility that it will exacerbate people wanting to get money out of China because of fears that the renminbi, or the yuan as it's also known, will depreciate against the US dollar. This will spark, if not panic, certainly another round of intense capital flight. And where will that flight go? A lot of it goes into real estate. And if the Canadian dollar is sitting there as a, that 25%, 30% discount, people, and the Aussie dollar are sitting at a 40% discount, is going to attract a lot of money out of China. Now, that being said, I think eventually foreign exchange markets will also realize that Canada is no longer just a marginal supplier of energy, but it also happens to be a marginal supplier of housing and money laundering services. Now, when you look at what happened in 2015, in Canada, we were basically a net exporter of energy to the tune of about $40 billion of oil, oil and crude products. We were, because we also import some, but so we were a net exporter of about $40 billion. Well, guess how much Vancouver residential real estate transacted for in 2015? It was just about $40 billion. Now, not all of that, of course, is driven by foreign demand, but as more and more of it becomes driven by foreign demand, and as more and more foreign dollars go into other cities, including Toronto, and it could even happen in places like Calgary, where, wouldn't surprise me with the current Bank of Canada regime that we start hearing about speculative property markets in places like Calgary, even though the energy patch is underwater. We could be in a situation where the Looney is driven as much by real estate and money laundering flows as it is energy flows.
We'll have more with Ted Dixon right after the break.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Ted Dixon. Ted, you keep mentioning money laundering as a Canadian industry. How big is it?
Well, we don't know. So the policymakers will say, well, you can't say the money laundering is a big industry because we don't know how big it is. Well, at some point you have to use your common sense and you have to make, a policy diagnosis without perfect information. You never in the private sector have perfect information to base your decision, and nor should policymakers expect the same thing. So we've got a situation where we've got an organization called FinTrack, which is supposed to be monitoring these money flows, and they seem to be hopelessly understaffed, under-resourced, and all they do is come out with a litany of reports, in the real estate market, for example, saying all these deficiencies of monitoring money laundering, or complying with money laundering rules. Well, so we're really in the early stages of coming to grips with money laundering in Canada, and there just doesn't seem to be the will of policymakers to do anything about it. So, it leads me to believe this industry is only going to grow. So if you don't think it's a big industry now, I suspect it will be much bigger 5 years from now, because there just doesn't seem to be a desire to clamp down on it. What my take in terms of what the early moves of the new government, they're more focused on Canadians avoiding taxes, which is fair enough, through offshore shells and the like, but not paying as much attention to money laundering coming into the country. Now, I could be wrong on that. We'll have to see how that plays out. But it seems to me that we're still, as the policymakers in this country, are still more or less turning a blind eye to money laundering in Canada.
Well, the BC government disbanded the unit that looked after money laundering at casinos. They've only reinstated it 8 years later. And I know money laundering is going on because a friend of mine asked me, I had $1,300 in chips and this guy offered me $1,800 for the 13. Why would they do that? I said money laundering, because then that way they can have the money deposited directly in their bank account. And if they're questioned about their funding, they can say, see, I won it at the casino. It's legit.
There's no possible way to get statistics on all of that, just like the underground economy. So you have to use your common sense, and if you feel that money laundering is not an issue in Canada, fine. That's I'm sure there's you can fall back on a number of arguments, including we don't have the data. But when you look at, for example, what's happening in Bitcoin, it's surging again. When you look at that type of activity in relation to the threat of a devaluation in the Chinese currency, there's a lot of data points out there that policymakers can look at if they really want to and come to a conclusion that there's something going on. But Jim, it's not until it affects tax revenue on the negative side that they tend to get concerned. When they closed down the investor immigration program and the entrepreneur immigration program, part of it was likely driven by this embarrassing finding that these immigrants were paying less than refugees in taxes. And so even though they may have been paying a few $1,000s in taxes, it just became too much of a stick of dynamite for Ottawa to handle, where if it ever really got out. And it just kind of snuck out there, this news that these players were paying less than refugees in taxes. So the tax return wasn't there for that type of immigrants, so they closed that program down, those programs down. I think there's an assumption that money laundering brings with it some tax revenue on the positive side. Again, that would be done without the data. Somehow, when it works to policymakers' advantages, the data doesn't matter as much. So, it's still convenient for policymakers to sort of ride this inflow of cash if it helps to prop up the economy and give a sense of, everything's great, we have a vibrant economy. If it's being pumped up artificially by money laundering, then there's there's an incentive for policymakers to kind of not take action, I guess.
How big a windfall will legal marijuana be to the government? Every U.S. state that's legalized it has made at least twice as much money as they thought they would.
Well, it should be pretty big, and the question is, who's going to get most of the gains from this legalization or decriminalization? I suspect, I have every confidence that the government will figure out a way to get its fair share. So, we're definitely talking about billions of dollars, and again, it's just a question of it could be so embarrassingly big that it's the type of problem that any politician would love to have.
And of course, too, the states that legalized it, when sales first started, they had to ration how much they could give people because of the high demand. So perhaps more people use marijuana than the government has any idea of.
Well, you just look at the proliferation of marijuana shops in Vancouver. It's almost as if in the old days when in Quebec, when they provided let little mom and pop grocery stores sell beer and wine. You had these mom and pop grocery stores on every single corner in Quebec, right? Because they were able to sell legally these alcohol. Well, you almost got the same phenomenon with pot shops in Vancouver, don't you?
Well, they did pass bylaws requiring them to have business licenses, and several have closed. But I think they did a survey a couple of years ago. Are there more Starbucks or marijuana dispensaries in Vancouver? And I think dispensaries outnumbered Starbucks 2-1. That's a lot of pot.
Well, there you go. And the nice thing about this whole sort of movement to have medical marijuana is there are a number of public companies that are now trading on the Toronto Venture Exchange and the Canadian Securities Exchange, and they have to provide some financials about what they're charging. And so you can go to some of these companies and you can actually see what they're earning per gram of marijuana. So I believe I could be wrong, but I believe it's competitive with a lot of the type of drinks they sell at Starbucks. So that number does not surprise me.
Ted, thank you very much for chatting with us.
It's great to be back.
My guest has been Ted Dixon, CEO and co-founder of InkResearch.ca, Canada's first online financial news and research service. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our popular YouTube channel is Talk Digital Network. Comments or questions can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.